Should I be an LLC or PLLC? Or should I be an S Corp? That's the number one question that I keep seeing and getting often. So we're going to talk about it today on our Talk to Me Thursday live. Welcome to Thursday. If you are new to me, I am Chastity Grady. At my company, Grady Tax Plus, it is our number one goal that we are keeping the IRS out of your pockets so that you can live a better life. Why? Because you deserve it, right? We're in 2026. We deserve to start actually living the life that we deserve to live, that we have envisioned in our minds. And keeping the IRS out of our pockets is one way that we're going to be able to do that. So let's go ahead and get into the live. This is going to be a two-part, I'm going to say this is going to be a two-part series. I'm going to talk about some of it today, and then next for our Talk to Me Thursday live, I will do the other part next Thursday. Okay, so I'm just going to do one aspect, and then next week we'll cover the rest. All right, here we go. So should I be an LLC or should I be an S Corp? Well, one of the things you have to know about an S Corp is that you have to understand that an S Corp is just a tax strategy, right? Most people, because of the media, because of TikTok and all and Instagram and Facebook, all the things that people are putting out there, because they're just going off trends, they're just saying what they've heard. They haven't read this information for themselves, and the information just gets passed down. The wrong information just gets passed down from person to person. And I'm here to set the record straight. I'm here to set the record straight. An S corp, that is just a tax strategy. So when you start your business, you're not starting it typically as an S corp, unless you have already had a tax plan in place, you did some tax strategies, and you know from the very beginning when you start that that's the way that you would need to go. Otherwise, typically, being an S corp, that is a tax strategy. Sorry, what is this on my something on my camera? I don't know what that is. Something on my camera that's distracting me. Apologize for that. But yes, this is just a tax strategy. So when you think about tax strategies, you're thinking about, how am I going to save money from the IRS? How I'm going to keep more money of my pocket? How I'm going to save more money in taxes, right? And S corp is just one of those strategies that you can use in order to do so. Yeah, I'm sorry, but this, whatever this is on my glasses, maybe it's not on the screen, but there's something on the something, sorry, that's really bothering me. Okay, let me see. Okay, maybe it's my window. I think it's the glare from my window. Give me 1 second, y'all, because that's gonna bother me. It's gonna bother me. Okay, messing up my Opus clips. Okay, here we go. Let me repeat what I said. So, in regards to an S corp, it is a tax strategy. It's something that, after you have considered all the things that you have done to save money on taxes, and it's kind of like an upgrade, I like to say. Sometimes it's considered an upgrade, where it's like, I've done all that I can do at this level, at the LLC, at the PLLC level. So let's look at, or not look at, because the tax analysis is going to let you know that this is the way to go, that you should go ahead and move on to be an S corp, and that's after you have considered all things. Now, when you look at what's an LLC, what's a PLLC, that is simply just a legal entity. It's a legal entity. You set it up with your state so that you can have legal protection from someone suing you and potentially coming after your personal assets. That's the whole purpose. And I'll be honest, I'm a proponent of, if you're going to be in business, then you get your legal protection in place from the very beginning. I'm not a lawyer. I'm just telling you what I think. And the reason being is because if you're going to pretend to be in business, the you being sued, if you get sued, that's not for fake. I mean, that's not for show. That's going to be real. If you get sued and you don't have legal protection, that's a real lawsuit. And so your real personal assets will be at stake if you were to get sued. So I don't subscribe to people who say, oh, you're just starting out, you don't need to have your LLC, you don't need to have your PLLC because you haven't made money, or you haven't made as much when you start making a certain amount. No, when you make $1, even if you made $1 in your business, you want to protect that dollar, okay, legally. And so that's what the LLC, that's what the PLLC or corporation, that's the entity too, that's what that does. It legally protects you from the fallouts of any type of lawsuits that may come or may arise in business. And the fact that you are even in business, that is right there is also this all you already meeting the prerequisite of being sued. You're already meeting the prerequisite of being sued because you're in business, right? And so I'll be honest, I'm someone who's like, well, if you're gonna be in business, and let's define what being in business means. Being in business is being an independent contractor. You're not anything that's not a W 2 employee. If you are not a W 2 employee, then by default, you are considered a business owner. Whether you want to own that, whether you want to recognize that for yourself, you are considered a business owner. Just the fact that you decided that you want to start accepting clients for payment, you are now a business owner. And because you have made that decision to become a business owner, you have to treat yourself as such. You have to go ahead and start treating yourself like the business you truly are. Like I said, if you were to get sued, those lawsuits they aren't fake, right? They aren't fake. The letters from the IRS concerning non-compliance and all the things, those letters, they are not fake. Just because mentally, and that's a mindset thing, just because mentally you may not consider yourself to be a business owner, if you are not an employee, if you are not an employee, then by default you are a business owner. And because you are a business owner, and now that you know that you are a business owner, you must start treating yourself as such, because the things around you, they're not going to change just because you didn't decide to treat yourself like a business. It would actually be worse for you. Think of it like this way. Think of it this way, rather. If you are just an independent contractor and you were to get sued, what are you going to say in court? Oh, I was just doing this on the side. Oh, this is not my full time thing. Just imagine how you would look standing up in court saying those things. Attorneys, they would have field day with you, because then they will know, oh, everything is fair game. So if you own a house, if you have personal assets, it's fair game now, because you didn't treat yourself like a business. You didn't separate your accounts, your bank accounts, right? So I'm not trying to say this information to you to scare you. This is how you attain knowledge. When you have knowledge, you have the power to start taking action, to start doing what's right, regardless to what other people are doing. Listen, don't worry about what other people are doing. Just because other people aren't getting their LLCs, just because other people aren't getting their PLLCs, that's not your concern. Your concern is making sure that you are able to sleep good at night, knowing that you have done all that you can do to protect what belongs to you. So I kind of get weird. I kind of get taken aback when I see Facebook posts about, should I get an LLC or not? And people are like, oh no, you don't need that. You don't need that to start. Yeah, technically you don't. But if you want to sleep good at night, if you want to make sure that your personal assets are protected, then you do. Then you do. Again, those lawsuits are not fake. They're not fake. If a client tries to charge back you, that is not fake. How are you going to withstand against all of that if you're not legally protected, if you don't have a strong foundation? And that's where the LLC and PLLC comes in. Now, S-Corps. If you're an LLC, if you're a PLLC, for those who are professionally licensed, if you have done all of the tax strategies, this is where we were talking about how S-Corp is technically like an upgrade. It's an upgrade to your tax situation. There's so many tax strategies that are out there. Hiring your family, hiring your spouse, hiring your kids, just hiring people in general. I like the idea of hiring family because you're keeping the money within your household. When you're an LLC or a PLLC, the money that you pay yourself is not tax deductible. You cannot write that off. But if you have someone who's already helping you in your business, you're already consulting with them, right? You're already telling your spouse, hey, babe, what do you think about this? That's consultation. Your spouse is a consultant, an unpaid consultant in your business, and you don't even know it. How about all the times if you were consulting with your spouse, all those staff meetings that you were having, that's paid. That's something your spouse can be paid for. Your spouse does not have to be a licensed professional. Your spouse does not have to actually have done the work that you do in order to hire them. And that's what I see a lot with social workers and therapists. You believe that, oh, well, my spouse is not a therapist, my spouse is not a social worker, so how can I hire them? The fact that you are consulting with them about your business and their thoughts, maybe they help you with your website or whatever, a lot of things. Your spouse is a consultant. You can hire consultants in your business. That's up to you to decide what kind of experience the consultant that you want to hire has. That's up to you. You have that full discretion in your business. That's why when I talk about being in business, treat yourself like a business. You get your employee handbook, get those job descriptions. Your job description tells you what's required of someone who's a consultant. If they don't need to have a degree, fine. That's up to you. But that's up to you to decide. That's on you. Okay, that's all I'll say. That's on you to decide. But it doesn't have to be complicated. You can hire your spouse to be a janitor, okay? To clean your office, your home office, your in-person office. There are so many roles that you can do, admin assistant, just all kinds of things. But the number one, y'all got to put this in your notes. The number one job that your spouse can have is as a consultant. As a consultant, okay? Okay, I get excited about this because this is just like, I don't know, it just makes do something to me, okay? Yeah, so as a consultant, you can hire your spouse as a consultant, and the money that you pay them is tax deductible. You can write it off, and guess what? You benefit from it because if you're married, then what's theirs is yours, right? What's theirs is yours, okay? Now, if you my spouse, what's his is his, because I'm like, okay, give me 1,000 a day or 800 a day, and he's like, no, this is mine. Okay, so I don't know, y'all work that out. But that, oh my gosh, we gotta do the cannot write that off masterclass. I gotta bring that back because that class is so much fun. We can deep dive into these tax strategies. Okay, but yes, as a consultant, okay, hiring your family, home office deduction, the mileage. Now the mileage is a big deduction that I see many business owners miss out on taking because you're not keeping track of your records, right? When you're not keeping track of your records, you miss the opportunity to write off things because you don't want to go back and reconstruct those things and figure out where did you go on this date and why did you go there. We're still early on in the year to where you still have an opportunity to still go ahead and start tracking your mileage. It doesn't have to be all fancy. You can get a spreadsheet. I do have a free spreadsheet that I give out that's audit proof. By audit proof, it has the necessary information that the IRS would ask you if you were to get audited. Okay, it's free. It's a spreadsheet. I put the link in the comments. You can download that so you can have it for yourself. There are also free apps out there. There's Stride, STRIDE. There's MalIQ. If you use QuickBooks, you can use QuickBooks. Although I don't really like the QuickBooks mileage. Sometimes it glitches a little bit, but it is free. You can try that. There's so many other free ones out there. But regardless to what method you want to use, just use a method. Just choose one. Don't get caught up in the hows and just choose the method and start tracking now. You want to have the beginning year and the ending year mileage from the time you started using the card for business to the end of the year. Okay, because even though we're tracking your business miles, we also have to know the percentage of the car is used for business if we're going to itemize the business expenses for the car. Okay, by itemizing meaning you can choose between taking mileage or using the actual expenses, oil changes, repairs, maintenance, all the things. But you still have to track mileage regardless to which way you choose. So that's why I say always track your mileage. It doesn't matter. You still got to track it. Okay. Home office, I talked about hiring your family. I talked about the car, meals, okay? Having lunches with people regarding business activities, talking, just a lot of things. What happens is with the tax strategies, some of you don't realize that you can start creating opportunities to have tax write-offs. If you know that you're going to already have a girls' night, right? If one or two of you are a business owners, you can talk about business at the dinner. And guess what? Now that meal has become tax deductible. So that's why I say tax strategies, tax strategies. It's all in the tax strategies. You can start creating opportunities for you to have tax write-offs. If you know you're gonna go out to lunch with a friend, okay, let talk about business. Tell your friend about your business and what's been going on. That's marketing. Okay, your friend doesn't necessarily need to purchase, but the fact that you are talking about your business and how you help people do this, that is a form of marketing. That's a form of advertising, because that person can then go say, hey, yeah, my friend, she told me she does this, so you should get with her, my friend. It's not that complicated. We try to make tax write-offs look very tense, very formal, very formal. And yes, they can be, but you can have fun with them as well. You can have fun with them as well. And then traveling, right? So one, there's so many things. Okay, I'm just touching the surface because I don't have I don't have much time on the live. I'm just grazing the surface, and it's like after you've tried. Oh, hire your kids. I didn't really touch too much on that. But in the LLC and the PLLC, you can hire your kids up to the standard deduction. Let me just make sure before I say it, I give you the right number. Standard deduction. Okay, in 2026, no, not 2025, 2026. Okay, here we go. In the PLLC and the LLC structure, you can hire your kids up to the standard deduction, which is $16,100 for 2026. And it be tax free not only to you, as far as paying payroll taxes, and it can also be tax free for your children as an employee. I see this a lot where people are saying, "Oh yeah, give your kids a 1099." Then your kid is going to have to pay taxes on that. If you give your kid a 1099, your kid is going to have to pay taxes, because guess what? A 1099 is what? A business. That's you being in business for yourself. And can your kid truly say that they were running a business, doing whatever you told them to do? Now, some kids can, they really can, but it won't be beneficial, because what's the whole point of using tax strategies if you're passing on a liability to your children? So you can hire your kids. Your kids can do multiple things. They don't have to be the therapist or whatever you do. They don't have to be that. Your kid can be the janitor. Your kid can be okay, y'all. Perfect example. I'm getting my suit tailored, and when I walked into the establishment yesterday, the owner's kid was at the register. He was probably every bit of 8 years old. And he welcomed me in. He went to the computer, and then he grabbed his mom for her to help me. That is hiring your kids. Listen, that's hiring your kids. Now, I don't know if why he wasn't in school. Maybe he's homeschooled. I don't know. Because this is like at 9 or 10 in the morning, right? But that's a method. It doesn't have to be extravagant. Your kid can be part of your marketing support team. If you do vendor events, your kid can set up the table, okay? They can pass out flyers. There's so many things that your kid can do that you can pay them for. If your kid is older, maybe they know how to work a phone really well. They know how to work social media. I have clients who their kids are managing their social media accounts. They're doing the posting, they're scheduling the post for them. They're editing their videos. That is a job. And you can pay your kid the money up to $16,100 without you paying payroll taxes on it, and without your kid paying taxes on it. Why does your kid not pay taxes on it? Well, if you pay your kid $16,100 as let's say that's their W-2. I wish I had a screen share to show you. $16,100, and then you're allowed to have deductions, and then you would take the standard deduction because your kid is single. The standard deduction is $16,100. So what's the income? $16,100 minus the deduction of $16,100. It equals zero. What's taxes on zero? Zero. Tax free. That's how you maximize your tax deductions. That's how you maximize your tax savings. And you get to a point where it's like, and you can pay your kid over 16,100, but with every dollar over that, you would have to pay payroll taxes on it, and then they would need to file a tax return, especially if they didn't have taxes taken out of the paycheck. Okay? So I gotta move on. But yes, after you have maximize all of those things I've mentioned, and it's like I still have this large tax bill. You can define what large is to you. I'm gonna say large is over 20,000. I still have this large tax bill. What can I do? Then that's where we consider, okay, now if we make you as the owner the employee of the company, will this save you money? If we weigh the pros and the cons, if we look at all the expenses, all the fees that it takes to run an S Corp as a result of you becoming one, because many people don't consider that when you become an S Corp, you have increased tax return fees, you have to pay payroll expenses, you have to pay the payroll taxes, okay? There's and then strategy sessions, you have to pay for that, just different things that come with that. And then if all of that, in addition to putting you on salary, outweighs the cons of just staying in LLC and PLLC, then we decide, okay, then let's make the switch. Let's upgrade to that next level. And I'm only mentioning S Corp, but C Corp is also an option that sometimes people are afraid to talk about. But if you know me, you know I'm not afraid to talk about anything, because I believe that C Corps, for S Corps, is if you have 250,000 plus, it's really not beneficial to you, because you're out that net profit that you're going to carry over to that personal return, your tax bill is going to increase to the 30 percentile, to the 30s, right? And as a C corp, you just have that flat rate of 21%, so that saves you a good 10 plus percent in taxes, right? And that's a big difference. Now, we're not talking about C Corp today, but I just want to throw that out there, because the S Corp, that's not the only strategy. That's, like I told y'all, it is just a tax strategy. C Corp is a tax strategy, whether to elect to become a C Corp. There's so many. I didn't even talk about retirement. That's why I said this is a two-part series. Next week, next Thursday, I'll come back and give y'all the rest. But maximizing your retirement contributions as a business owner under a SEP IRA, okay, or doing a solo 401k. Those are other strategies that we could use within the LLC and PLLC before we decide whether or not we need to make that switch, okay. And I do this for my clients, where we do an analysis and see, can we, how much more can we maximize in this particular structure as an LLC and a PLLC? And if we need to make the switch, then this is what we're going to do moving forward. We do all of that. And before you decide to ever become an S Corp, you always want to do an analysis. You never just go off somebody saying, oh, because you made this much, become an S Corp, because that is not true. How did you maximize all of the strategies? Because some strategies in the LLC and the PLLC structure does not apply in the S Corp. Okay, for example, hiring your kids in an S corp, it's not tax free for the kid or for you as the owner. You have to pay payroll taxes. Then your kid will file a tax return to claim back their either their refund, or if they had no withholdings, then they got to pay taxes on that. Okay, so and then home office, the using your car for business, that has to be restructured a different way. So some of the things that happens in the S corp, you lose out some of the benefits when you make that switch. So that's why you have to weigh the pros and cons. Am I willing to lose out on this benefit, right? So I hope this live I hope this live gives you clarity on, should you stay an LLC or PLLC, or should you go to an S corp? Okay, hashtag replay if you're watching the replay. Like I said, we're gonna do a part two next Thursday on Talk to Me Thursday. We'll do the part two where I can go more in deep a deep dive into this, because it can get complex, but in a fun way, in a fun way. And I gotta bring back the can I write that off? Can I write that off masterclass? I gotta bring that back. I do have it on my calendar. I will be releasing the date to y'all whenever I have that available to you. Okay, as I come to a close, I got to give y'all my benediction, because if you follow me long enough, then you know that I'm a follower of Jesus. And not that you need to be a follower of Jesus to listen to me or work with me, but I just have to, I'm commissioned to let people know who I am, and all the things. So the reason why is because in John chapter 10, the Jews, they were talking about Jesus, and they were like, hey, how long are you going to keep our soul in suspense? If you are the Christ, then just tell us. And Jesus said, I told you, but you do not believe me. The works that I do, they testify concerning who I am, but you do not believe me, because you are not my sheep. My sheep hear my voice, and they follow me, and I know them, and they shall by no means perish, and I will give them eternal life. No one shall snatch them out of my hands. The Father who gave them to me, no one should snatch them out of the Father's hand. I and the Father are one. Why do I have to give you this? Why am I even switching to this topic? Well, like I said, I'm a follower of Jesus, and I have been commissioned to let everyone know who I come in contact with in some kind of way. It doesn't have to be formal, it could be subtle. I can just say the word God and you just kind of know, and that's on your mind, right? But I've been commissioned because of who I am in the kingdom that I have not released to y'all yet. But if you kind of follow me, you kind of know. Um, who I am in the kingdom as a kingdom citizen is my responsibility to make sure that people who are getting a touch of me, you get in a touch of Jesus as well. And as it relates to your business, when you hear people's voices, because there's so many voices out there, there's so many other tax professionals out there, but to the people who are assigned to my voice, everybody else's voice is going to sound like noise to you. It's going to sound like noise to you. It's not going to make any sense. It's not going to resonate with you. They can say the exact same thing that I said on this live, and it will mean absolutely nothing to you because you are not assigned to them. And so that's why I have to, and that's not just me, but that's why you have to show up and you have to be verbal about who you are and what you do, because the people who are assigned to you, they need to hear your voice. They can't just read something, and because we know that's another thing with reading, like reading text messages and reading statuses and posts. Oh my gosh, people don't hear your tone. I made this Facebook post in this cooking group just for fun, right? And people were like coming for my neck. People were saying mean things, all kinds of things, and I responded to someone in a certain way that was gentle. I felt like, but then they just came at me saying, "Oh, I'm in my feelings" and all this stuff. I was like, "Ma'am, I'm actually not in my feelings. I'm agreeing with you. You don't know me because you can't hear my tone. So you don't know how I am speaking to you through the messaging, right? That's why you can't rely on sending blog posts, sending emails, sending text messages, sending all. You can't rely on written content, written form to reach the people who you are called to serve because they need to hear your voice. Had she had heard my voice before, she would know that my tone was not in a negative way or a demeaning way. She would have known my tone, but she did not know my voice. You have to show up. You have to be who you are. And people have to hear your voice, whether that's live, whether that's you recording a video and posting it, whether you speak it in front of a crowd. People have to hear your voice because the people who are assigned to you, they're going to follow you as a result of the sound that's coming from your voice. Okay. So that's why I end with that scripture. And also, if you hear God's voice, if you hear Jesus' voice, then follow him. That's the ultimate goal. Okay. So again, I hope something today blesses you. We're going to do Fire Your Boss Friday. Tomorrow it'll be kind of informal. It won't be too long, but I'm gonna give you that content because again, you got to hear my voice. I'm showing up Monday through Friday. Monday we do motivational Mondays. Tuesday we do tax therapy Tuesday. Wednesday we do wellness Wednesday. Thursday we do talk to me Thursday, and Friday fire your boss. So if you're someone who want to fire your boss for good and be in full-time entrepreneurship without the headache, you're gonna want to be you want to be on those Friday lives. Okay. All right, so that will complete this. Oh, Imani, I'm sorry, I didn't see your comment. That is right, voice equal frequency. Yes, I love that. Voice equal frequency, right? People have to hear your voice, and that's why you can't be ashamed to speak. You can't look at how someone else says things and how everyone else. Your voice is unique to you. Your voice is unique to you, and that's what's going to stand out to other people. That's what's going to stand out. And that's why I no longer get bothered when someone, they're not called to my voice. That's fine. I can only shepherd the people who is called to my voice. I can only help the people. Let me give y'all a good example. There was a past client that I had. There was a past client that I had who I had told them to do XYZ for their previous tax return because it was not right. I told them, you need to do this because it's not right. And then a couple months later, the same person went on to say that when I told them I couldn't work with them because XYZ, they didn't follow what I said. They proceeded to tell me I did not tell them that they needed to change their return that someone else prepared. Okay, no, I'm not going to put my personal feelings in it. Let me just stay professional. That's why I said people got to hear your voice. Okay, here we go. So, and I said, I actually did. on this date, even my Calendly recording has it, that I said, you need to change that because it's not right. And then they acknowledge that, yes, you did say it, but you didn't say it like this, then that, and that. Like you didn't say it a certain way. So I didn't think I needed to do anything. This is why it's important that people who are called to your voice, they will follow you. This person was not called to my voice. I'm not going to rattle and dangle my finger at you. The people who know me, who are assigned to me, if I say, hey, you need to change this because this is wrong, and if they say, yes, okay, let's move forward, let's do it. But if you ignore me and then later try to say that I did not give you this advice, but it's not that I didn't give you the device. I didn't give it to you the way you could hear it. That's why it's important that people who are assigned to you, they got to hear your voice because it's a certain sound. She didn't understand my sound. And guess what? That's fine. We're not for each other. And I'm glad. I'm glad about that because you got to go to the people whose voices you're going to follow. Okay? I shouldn't have to yell. I'm not yelling at anybody. I barely yell at Junior. I'm not gonna yell and talk in a certain way that's not in alignment with how I speak, right? I am only able to help people who's going to listen to my voice, and I thank the scriptures for giving me that confidence to operate my business in such a way. And you should take that same confidence. You can only operate your business in the way that you can operate it. And if someone is not in alignment with that, oh well, they're just not your sheep. They need to go find their shepherd. Release them in the name of Jesus. Release them, okay? And move on. That's it. That's all. I hope y'all have an amazing Thursday. I'll see y'all for Fire Your Boss Friday, and I'll see you in the next one.